United Nations states that criminals launder an estimated 2 to 5% of global GDP in a year. That's $800 billion, $2 trillion in today's US dollars. Trade is complex and complicated, reflecting the nature of connected supply chains that stretch worldwide. Organized criminal groups, professional money launderers, and terrorist financing networks exploit trade by enabling many types of financial flows, including laundering criminal proceeds. Trade-based money laundering, also known as TBML, is one of the most popular ways to conceal and move illicit funds. It exploits the complexities and vulnerabilities of global trade in goods to hide the illegal origins of funds or to finance terrorist activities. Trade-based terrorist financing, TBTF, uses the same trade processes as TBML, but there is one main difference. The money moved can be from both legal and illegal sources. This makes it harder to detect and disrupt TBTF. In practice, TBTF schemes can and do rely on the common TBML techniques. They can also feature real firms and transactions. These go all the way through the supply chain until the funds go to terrorist groups. Service-based money laundering, also known as SBML, is an increasing risk. It is not well recognized. It can make it harder for authorities and regulated entities to detect and disrupt this type of ML. TBML relies on exploiting trade in goods, whereas SBML schemes rely on exploiting trade in services or other intangibles. Money launderers use this trade to hide and legitimize the movement of illicit funds. Trading goods and services on the internet, or e-commerce, is another area exploited by criminals. Financial intelligence units, also known as FIUs, can play a vital role in detecting and tackling the laundering of illicit funds through this method by adequately supervising the payment service sector. Money launderers also misuse corporations, including front and shell companies, to hide the illegal source and true owner of funds or assets. This dramatically hinders the detection, investigation, and prosecution of money laundering offenses. The detection of TBML and SBML is complex and requires collaboration between domestic and international, public and private sector partners. FIUs can play a critical role in uncovering these schemes. They do this through the analysis of financial data and by comparing it with data from different sources available to the FIUs. However, one of the main challenges for detecting TBML is that many FIUs around the globe typically don't have access to trade data. This makes it hard for them to effectively produce and share financial intelligence related to TBML and SBML. Reporting institutions also struggle to detect and report TBML and SBML cases. This is due to limited knowledge and data, the complexities of trade, or the multi-jurisdictional nature of their transactions. FIUs have found several challenges during analysis, hindering the identification of TBML. Some of these challenges include the lack of specific information and foreign trade databases makes comparing trade data with financial transactions impossible. Inability to verify documents on trade data with information located in foreign countries. Some of the declarations made to customs are poorly filled due to inadequate controls. In detecting TBML transactions, some funds originate from places where identifying the crime or true owners is challenging. Cooperation and information exchange channels with some countries are challenging. In some cases, supporting documents submitted relating to trade data are hard to verify. It could be difficult to validate the nature of the business of the companies involved in trade transactions through open source information. Lack of direct access to tax information regarding natural or legal persons. However, in many cases, FIUs can spot and fight TBML and SBML. They know financial flows and have access to fast information exchange channels, like the Egmont Secure Web or ESW. The Egmont Group member FIUs are vital because they can quickly share information with foreign counterparts based on mutual trust and reciprocity. Rapidly providing proper international cooperation is crucial to detecting and investigating crimes beyond one jurisdiction. For TBML, this cooperation is especially important. Money launderers often use front or shell companies in one place to move funds and goods between others. All of these are pieces of a puzzle which can only be solved if all the involved jurisdictions provide necessary assistance to each other. TBML may be transnational. For example, the crime that generated the funds often happens in other jurisdictions from where the TBML takes place. FIUs are critical for the investigation of this puzzle. Different approaches carried out by FIUs led to the detection of TBML. Some were due to trade data access constraints. Others were found while analyzing reports available to the FIUs. The following are some of the different approaches taken by FIUs that revealed TBML-related activities. FIUs combine the relevant pieces of intelligence to frame a complete picture of the financial scheme. This enables finding, proving, or possibly disproving a TBML case. Financial institutions submit several categories of reports to FIUs, helping their work on TBML cases. Reports relating to trade finance. The financial institution is directly involved and has access to the documents related to the trade transaction and looks for irregularities in the documents and/or in the customer's, counterparty's activities or the information provided during the trade finance process. Reports on open account settlements of trade transactions of a customer. The financial institution does not have access to the underlying documents. However, the FI can detect irregularities in the customer's financial activities related to trade and/or in their transactions and/or irregularities connected to their counterparties. Reports on trade transactions in correspondent banking. The financial institute has no access to underlying documents or customer information. However, it detects irregularities on cross-border transactions. These include those allegedly for goods and trade. It also flags suspicious parties potentially linked to known money laundering networks or activities. However, FIUs also use an alternative approach. It involves analyzing corporate structures and registration details. They look at alleged company purposes and corporate banking profiles. They also look at the relationship between corporate networks. For example, the networks may have common representatives. They may have overlapping ownership structures and the same registration addresses. They may also have joint bank accounts. FIUs can determine with some certainty that an international trading corporation was just a set of shell companies. They can then assume that trade transactions conducted between these entities and their subsidiaries are fake. Based on these initial findings, authorities can investigate the TBML scheme. This reverse approach shows the importance of collecting and joining financial intelligence and other data. It shows that TBML detection does not always need trade documents. Nonetheless, FIUs alone cannot be fully effective. We must work with customs, the private sector, law enforcement authorities, and other domestic and international partners. This effort is vital for joint success. ML through trade of goods and services will likely increase as the volume of international trade increases. Therefore, competent authorities should increase their ability to understand, detect, and investigate TBML and SBML. Transparency of beneficial ownership and corporate structures is key to these efforts. The Egmont Group will continue its efforts to support member FIUs and our international partners in tackling TBML and SBML.